Very different style YouTube video where we're going to give away some real valuable insight with no waffle, just useful pointers that are going to help you with your own trading every single day, again and again. Now this is a YouTube video, this is not a video pack course video, although it still should be an eye-opener for anyone who's watching and provide an insight that will really make a difference to your trading. Now I understand at this point there's probably a few skepticals out there that are thinking, how's trading psychology going to help me? You're here for strategy and tactics and actionable steps and all that kind of stuff, and they exist too, but trading psychology is absolutely massive. You just got to give it the chance to understand how it's affecting you, how it's affecting your trading, and the impact of making some changes are going to appear inside your own results. So please give it the time and watch the whole thing without just dismissing it. So it may seem slightly counterintuitive, but understanding your own destructive behaviour and your own traits and how you feel whilst you're trading is one of the most important things you can understand. Because as I always say, it's not about how much you win, but it's how much you don't lose. Because being profitable and gaining money is not necessarily about how much you earn, but it's the difference between how much you earn and how much you lose in terms of trading, or outside of the markets in the real world is how much you spend. So you want to keep that money, not just acquire it and then let it go out in the other hand, is what I'm trying to say. So managing the downside effectively is what we're talking about there. But trading psychology will really allow, understanding yourself and what you're doing will allow you to improve your trading and stop that wastage from happening. It's a bit like the quote that Warren Buffett says, the investor, it's like rule one's don't lose any money, rule two's don't forget rule one. So we're aiming not to waste money and be more efficient in what we're actually doing. So the more you're aware and the more you're conscious of that, the more easier it is to see it coming, to see a problem creeping in, and to stop yourself from doing certain behaviours, etc., etc. Because no matter how much profit you make, if you've got this destructive side of you tearing it back down and taking the profit away, then quite frankly there's nothing worse. So it's vital. If you are one of those skeptical people who's a bit not sure about this right now, please give it a chance to watch the whole clip, because it's more likely to help you than anybody else. Because if you don't see it coming, you're going to get blindsided by it. I'm going to give you a brief overview before we kick off, because this is a longer clip than usual and it's highly likely that some of you will probably come back at a later date to watch the rest of it. So the clip's broken down into 5 main areas. There's lots of points underneath each subheading, if you like. So it's probably best just to remember where you are out of the 5. Starting from the top, we've got your psychology, trading beyond the markets. What it is, why it's so important, and how it can be sort of the most effective thing that you do when it comes to trading in the markets. The inclination for a lot of traders is to look straight at the markets every time that they don't get the results that they want, their strategy, their setups, what's actually happening on screen. But the reality is, it's not just what's happening on screen that's important. It's a flawed way of thinking, if you like. It's the wrong thing to be looking at. So we're going to start off by taking a look at your overall psychology. Then we're going to move on to my own personal experiences, some of the self-sabotaging type things that happen, and it happens to all of us, doubt, frustrations, and how you can overcome that. Part of that will be my personal story and things that I experienced and what I've done to actually overcome them. Because, at the end of the day, you're not born with this special gift whereby you can just do something. We're all the same. We're just people, You have to learn and train yourself and adapt and understand and evolve to the situation. But the good thing about that is, if you're looking in the right places, you can learn a lot quicker rather than having to do it the long way around. Sometimes I've gone the long way around and it's not something you want to be doing. There is a faster route. Next, we're going to move on to conflicting forces, because believe it or not, within ourselves, and it happens to everybody time and time again, there's these counterintuitive traits that we all seem to possess at times, and for some people it's worse than others, and so it can be more of a struggle. But if you're not aware that they're actually there, then sometimes your subconscious thoughts, beliefs, feelings on the situation can impact what you're actually doing and result in, not the most effective trading, which is what we're looking for here. Then we'll move on to prolonging struggles, denial, suffering, limitation, stalling progress, and what you can do about it. Why that happens is obviously a large part of fixing the problem, understanding why it happens, and knowing that basically it must change. If you want to succeed and you want to be more efficient, it must change. It's something that has to happen. But I'll show you a few things you can do about that en route. And then finally, I want to take a look at my own personal observations I've had about trading, about people learning to trade, and the up and coming traders that I've seen, on the website and forums and stuff like that as well. Because, as I say, as with all of these points, there's like this routine set of issues and problems that come up time and time again, and sometimes people aren't aware quite how important all of this really is and how it can actually change everything. So finally, before we kick on, if you want to skip ahead, there'll be short links in the description below on the YouTube channel. If you do find a video of use, please subscribe and hit the notification bell, because in their infinite wisdom, YouTube have changed it now so that not all content gets shared to everybody unless they've hit the notification bell. So starting off, psychology, why is it so important? I mean, what's the big deal here? Because it really is a big deal. Now, I don't know if you've ever wondered, but we all seem to do various things routinely as human beings. Some people are worse and more prone for certain things than others, but they crop up and, they are very impactful when you're trading. So I don't know if you've ever wondered, but why do you want something so badly, but then do the opposite? I know I've certainly done that in trading and also outside in the external world. But what makes you destroy any progress you've already built up? I can certainly relate to that inside trading. And why do you stop doing things that clearly work? Again, that's something I've done over the past, and that's not to say it's not important to have more strings to your bow as such. It certainly is. But knowing the difference between the two and knowing when you can routinely exploit something that does work, that you should be doing, and then actually doing it is very different. And then finally, why can't you stop yourself from doing something you know is wrong? Now, I think if anybody disagrees with that one, then, quite frankly, they're lying. Particularly when you're scalping the markets, I think that is something that crops up all the time. People knowing they should be scratching a position, but then they don't. And then they get caught out, and then they get frustrated and blame it on something else. But the reality is, all of this centers back to trading psychology. Because when you consider that trading is a percentages game, you realise that losing money is actually part of it. That's completely normal. And that's when you realise just how important this stuff can be. To succeed in trading, you're going to need to control yourself heavily beyond the market if you're to succeed at all. It's like pro athletes. I mean, you see runners, various other sports people, and they'll tell you that the actual race, if you like, say for example, if you're taking someone like Usain Bolt, the actual race is a very small portion of it. You've got the training, they've got to be in the right mindset, the mentality, they've got to be focused, they may have run the race through in the head 100 times over, etc. There's a lot more to it, and psychology is a large part, particularly in trading. Quite realistically, if you don't address it, then you're leaving yourself very vulnerable to being hurt within the market. But understanding this alone is only the first hurdle, because, quite honestly, you're not going to find the answer to these problems inside the market, which is, as I said in the intro, what I think a lot of people tend to do. They look straight to the market, they blame it on the market, an external thing, when actually internally is where they need a little extra work. Because successful trading is about letting the profits run and cutting your losses short. So when you bear in mind that it's just a case of winning a little bit more than the amount that you lose over the longer term, you suddenly start to look for efficiency hacks, if you like, little ways to be slightly more efficient in your execution, in approaching the markets, in finding potential movers, and limiting your own losses. Now, limiting your own losses is the massive one. And it reminds me of a saying that I was often told as I grew up, was that, the quickest way to have more money is just to spend less. And that's completely common sense, but you think about that in terms of trading as well, it's very similar. So the quickest way to actually have a better bottom line in your trading is to make less silly mistakes, because that is the thing that is most in your control. And in fact, it can completely change and, charge up your results, or turn even break even to something that's very profitable. So if you were to look at the zigzag line there, and you were to take the downturn smaller, then eventually, your end destination is miles away from where you initially started, which, like I say, is pretty much common sense. To put that into context, I've got a few older results here, which I dug back through the blog where I went through this frustration period in my own trading and my own experiences, where you can see quite clearly in the profit and loss, there was big highs and lows, but a lot of the time these lows were way out of proportion with the ups. So if we look at this quick screen grab here from a few years back, you can see, look, we're picking up 15, 10, 25, 28, 27, 17, and so forth. The odd 28 is going to creep in there. Now, the 28 is slightly larger than some of these, but when we get down to the bottom here, you can see that there's several mistakes in the row there. Now, it doesn't surprise me that they're in a row either. And this is something that I see from people time and time again. And this is not related to your edge. This is related to your own behaviour, your own psychology, your own feeling in the market. So, you know, I make all these nice 17, 14 pound returns. I have a 33. And in fact, no, it's not in time order. It's the other way around, sorry. So you can see I make 5, 28, 44 loss. Now, I can guarantee you at that point in time, even though I don't know exactly what happened on this day, that 44 quid loss would have pissed me off, which then led to me doing something stupid in the race afterwards where I lost 137. That's got absolutely nothing to do with my trading, because you can see that it's quite consistent, but then I just made a few stupid mistakes. Okay, and then a 6, it was paying again, 33, and did I have a little break there? There's 10 minutes in between, and then we're sort of back on the wagon and back to trading normally. Now, overall on the day, it wasn't brilliant because I lost £104, but you can see I've actually totted up on the other sheet there as well. £344 worth of losses that day. Now, if I hadn't done £344 losses, which is a bit extreme, obviously there's going to be some losses. If I hadn't done that, I would have been 240 quid in profit. Massive difference. If we click through to another one, this is all from around about the same period taken off the blog. And you can see it again, 11, minus 125, 14, minus 267. Absolutely wild. God knows what I was doing at that point in time. And then managed to get back on the wagon again. 66, not brilliant, but, you know. And then you look at the overall difference, and again, it's nearly £250 difference. So in them two slides alone, that's 500 quid difference to the bottom line. So if you can minimise the losses, and we've got another one here, so let's see, 144, it was a bit daft, and then we're back on the wagon again. Yep, and finally one more, 252 losses, and finishing 66 profit. So you can see that, you know, if you can minimise the foolish mistakes, particularly when they're one after another, and there's no surprise that they do tend to happen around the same period, because I'm still emotionally charged, I'm still, you know, not thinking quite straight. Psychology and my approach and mindset at that point in time wasn't brilliant. I was making mistakes, but, you know, this is the point where I was just starting to find my feet trading, really, to be honest with you. But if we can minimise the downside, then the overall result is massively different. Massively different. So 66 profit there, 250 quid's worth of losses. Well, if they didn't happen, I would have been 300 up. Now you look at that and you go, okay, well, there was always going to be some losses. So if you say there was only 100's worth of losses, I still would have been 150 quid better off. So from my experiences, I'm just highlighting the fact that I've actually done this too. I've made these mistakes as well. It's not unusual to do that, but I just really wanted you to see how much of a problem it can be and how much of a difference can be made by getting your mind straight. But that's not all, because focusing on psychology has hidden secondary benefits too. And it's probably foolish just to think of the first level benefits all the time. So when you understand yourself psychologically and some of the mistakes you're making, chasing mistakes is massively reduced, because you're already sort of hyper aware, if you like, of your own feelings and, you know, the perceptual mistakes you're making on the market at that point in time. Overstaking in the wrong situations is obviously less likely as well, and kind of ties in with chasing mistakes. And impulsive clicking is massively reduced. Generally speaking, again, because you're aware of how you are reacting emotionally or perceiving it slightly wrong, and therefore stitching yourself up. So making decisions over and over like a robot is more likely when you understand your own personal psychological imbalance, if you like. And it's certainly healthier for your overall bank balance. So moving on to that next point, personal story. There's part of an aha moment for me, where there were several around about the same time, and it's hard to remember exactly what order they went in. But results drastically increased over a short space of time for me. And it wasn't necessarily down to what I was doing in the market. There was probably a little bit to do with what I was doing in the market, but at the same time, I even remember having a conversation with another professional trader who doesn't trade anymore, I don't believe. They hit a higher level and decided not to because of the extra charges. He's on, in fact, you'll see his alias on the Geeks Toy forum if you go back. It's Leon the Fixer. But basically, we were having a chat, a verbal chat over Skype after a day's trading, and I was talking about various results, and I'd been making progress, and I happened to say during the conversation, well, you know, I'm so far ahead today, so I've knocked it on the head. And he turned around and said to me, why? Why have you done that? Why have you stopped yourself? It was a little bit of a strange realisation for me at that point in time, because it was only then that I realised, hang on, I'm actually limiting myself when I'm winning. And as the conversation went on, I realised that there's more sort of self-sabotaging behaviour, which we'll talk about in a second. I mean, in fact, the next point, self-sabotage, just a hidden obstacle. There's more about that on the next slide. But during this conversation, and I'd had, which I've mentioned elsewhere on YouTube as well, a previous set of events where I was rushing around, and typically at that period of my life I would rush in from work because I still had a job. I would rush in, I would possibly still be in my work clothes, everything would be a little bit chaotic, I'd make irrational and erratic mistakes, and quite frankly I was being irrational and erratic, and so that was expressed within my own trading. But what I actually realised from this little mini aha moment where I had this chat with Leon, and his name's Andy, and he said to me, why are you doing that? And another thing I remember him saying to me is, why are you looking at your results on a daily basis? Like, you know, there's variance included in results, and we all know this, and this is why it's so hard as well, I think, at times, because people know this, but they don't necessarily do anything about it, or they don't fully accept it to the extent where they allow it to change their own behaviour, routine, all that kind of stuff as well. But anyway, basically what I realised was happening is I was self-sabotaging when I was making a certain amount, and I was stopping myself from making any more when I was making a certain amount, and then I was potentially even sending myself backwards once I exceeded that amount, if I had exceeded that amount. And so it was very wrong to be looking at results in a short-term basis, and I started looking at my results more weekly and monthly, which was a suggestion from Andy at the time. Now, this takes us on to the next point, frustration, and I've put in brackets unnecessary there because quite frankly it really is so unnecessary, it's unreal, because frustration, as far as I'm concerned, just comes from not doing anything about something that you can control. Ultimately it's like self-created stress, if you like, and it just makes no logical sense. To overcome it, you have to like take the bull by the horns. It's not necessarily natural at first anyway, and we can find more natural ways of doing that, as I'll explain in a second. But you have to take the bull by the horns, and you have to confront the problem and find logical ways to work around it, because, you know, we're not born with special powers, and it's not the case that some people just naturally manage to get over it without thinking, because it doesn't work like that. To ignore this and possibly even deny it, I know it's a strong word, is foolish, because you're taking the longer route. Mindset's something you can control right now already, even like literally in this second or after watching this video. You can take control of this and actually start to change things instantly. It's not some new fandangled edge, it's something that you can action straight away just by being more aware. There's a lot more else you can do, but just by being more aware you can actually help yourself instantly. Now, as I was just saying about self-sabotaging behaviour, then it reminded me of the story of the guy that won the lottery in, like, I think it was 2002. So it took him like 8 years to get rid of 9.7 million. And he come from a typical kind of background. This is something that's come up a lot over time when I've learned about myself psychologically, because people have this perception of themselves and belief, and have certain views on how they can be their best sort of self and all that sort of stuff. But it overspills into your trading, is what I'm going to say. So this guy won 9.7 million quid. And then managed to burn it within 8 years and ended up being a binman again. It's not ideal. There's obviously a link at the top of the screen there if you want to read the whole article. But the point I'm about to make is there's these conflicting forces within inside ourselves, and if you don't necessarily correct the way you feel about some things and the way you view and perceive things, then you're going to make it a lot harder to make any change going forward and progressing. So there's a little picture of an iceberg on the side there. I would say the conscious objectives that you'll need to have to move forward. And a lot of the time we'll have a version of these is just a bit above the water. The big part is the subconscious issues, which is underneath. It's not the tip of the iceberg. It's, understanding the triggers and how to counteract them. But that is the immersed part underneath the water, which is far larger. So I would argue the previous image there with the guy with the bin stuff that blew the lottery winnings is he needed to work on the stuff underwater. His subconscious mind that makes him do things without really thinking about it, which is exactly what happens in trading. So your conscious objectives are usually typically things like goals and things that you want to achieve and money and how you're going to do that. So on the left, I've got a little list of examples there. So a good conscious objective to have when you're trading is to understand the market, understand how it works, the characteristics. Understanding your own strategy and the makeup of that strategy, why that works, why that fits with the market, why there's an edge included in part of that. And obviously focusing is really important, because if you're not focused, then you just don't progress, or if you do it at a far slower rate. So having views or even self-awareness, So self-awareness, hopefully after this clip, you'll have more heightened self-awareness as to how your psychological impact on your own trading has. But these are the conscious things that we often think about and the things that we value that are really useful to help us make progress and go forward as traders. But the part that's possibly more important are these subconscious issues, the parts that aren't included in that. And this is the part that sometimes people don't pay enough attention to. So what we're talking about, I'm talking about like the triggers and different behaviour and the way you feel about certain things and what you do, which actually leads to you not being as efficient as you can be, particularly if you're making silly mistakes. So financial lows I've put on there. A lot of the time people go on the chase or increase their staking or try to fix a problem and sort of like exhibit gambling type behaviour when they are trading because they've lost some money. So if you're fully aware that, okay, I just lost some money. In fact, if we were to go back to the screen grabs of my previous results, you can see that I was affected by the financial low of making a silly mistake in a previous race, which then led to further mistakes. So being aware of that subconscious issue and possibly setting up a structured way of dealing with that, we'll talk about that in a second in the next few slides. But even knowing that and being aware of that will actually help. Now, self-worth patterns probably links to the guy on the bin stuff there. Now, it took me a hell of a long time to realise this actually, and I think I only noticed it after somebody else said something, but like the guy with the bin there, his default of potential self-worth is possibly quite low, because when he got all that money, he managed to burn it and bring himself back down. I've heard it described as other things like a thermostat and stuff like that. But if you've got a certain level of self-worth that you don't believe you can exceed, then it becomes far harder to actually exceed that, because psychologically, subconsciously, you start to sort of sabotage your own profit, or even stop, like I said with my conversation with Andy. I know for a long time I had a struggle where, I wanted to make £10 a race. And when I look back on it, it was a bit daft in a way, because you can't expect to get the same result from every race. But I wanted to get £10 a race, and if I got beyond £10 a race, I may stop early or do something a bit silly, which would result in me losing some of that profit on that race. Makes no sense whatsoever on a logical level, but that's something I used to do. That was a subconscious issue. It was a bit underwater. Non-conscious reasoning, again, the same sort of stuff as what we just talked about there. And then the real killer, the bad one of all, is denial, because quite frankly, if you can't accept that this is an issue and you're not acknowledging it and doing something about it, and you are in denial, can't help you. Really can't help you, because you're going to wind up like the guy in the previous clip, just reverts back to mean, which is potentially a lot lower than you want it to be. So hopefully this slide alone has already brought a bit more attention to you and explained a little there. But we need a structured way to overcome and measure the problem in the first place so we can then correct it. Basically, you need to confront the issue logically. The video pack course's mentality section has got a few exercises and actions to do within it. I'm not going to share them in this clip because obviously that's part of the video pack, but we'll now take a look at the conflicting forces and how you can find a structured way to actually deal with these issues, even without giving you some of the specifics. So simply put, this is a structured way of thinking about facing these psychological trading issues. You start off with saying you're actively going to create something, like a mechanism, a plan, a routine, something you stick to deal with these problems. And it goes around very simply in the 3 circles there. So you've got the action, something that you're going to do in the first place, You're going to monitor that action and the results from that action and why you think that happened, and then you're going to send the feedback back round to potentially change the action, and so you can correct your own psychological behaviour. The primary example of that might be you're going to trade, say, 10 races, and the action would be after each race you're going to take a pen and paper and write down 1 or 2 lines just to say what went wrong in that race, what went right in that race, in the interest of balance, so it's not too negative. You're then going to monitor that over 10 races, look back through it, and you're going to see if there's a pattern of feedback amongst there, because you might find that several times you wrote, oh, I lost a little bit of money, and so I started clicking a little bit more erratically, or I used a larger stake than I would normally. And it's when you've got that list of comments there, and you're actually, you're physically monitoring it, it's logical, you go back to it, you can't ignore it, because it's written down, quite frankly, whereas previously in the past, subconsciously you could be sabotaging yourself in the way you're behaving, but because you didn't have it written down to go back, to confront yourself almost, you can't correct the behaviour or even correct the action. You could turn around and say, okay, this isn't really working for me, so I'll do something else. So what I'm talking about really is taking the guesswork out of it and creating something that you can come back to on a logical level and not be emotional about it, and understand yourself and what you're actually doing in the moment. There's lots of different things you can do, but that was just a quick example to show you how sort of a feedback loop structure works. Moving swiftly on, people often prolong this struggle. I did it. And so, again, you need to find a formatted way of dealing with this. So the question, the ultimate question is, what's holding you back? What is making you more inefficient in them instances where you make the mistakes and you start to sabotage yourself? Because what you really need to do right now is make an active decision that you're not going to be finish watching this clip, make no notes, never do any of it, and sort of act in denial. Take a pen and paper, make a note down, and log if you don't, because it may be a case you don't really know what it is that's holding you back right now. You might need to work that out, but it's well worth investing a little bit of your time just to find that out. So 3 quick questions to help you with that would be, what are the biggest psychological trading problems you currently have? And it might be a case of, it could even be beyond the exact market. It could be a case of, that when you get in from work, the missus is always on your case because she wants a little bit of time with you. And if you're denying her that time, it then leads to stress, and so that creeps into your trading. So what does it happen and why? I mean, I've pretty much just covered that in a little example there. And what are you going to do about it? So, you need a preferred structured plan, which you can't deviate from. And you're going to need to repeat that over and over to make a longer term lasting change. So, for example, again, if we go back to the missus, you're coming from work, she wants a little bit of time with you. There's only a limited amount of races. You need to either make some kind of agreement with the missus, sit down and spend a little bit of time with her, and then start trading the markets, or do it the other way around if she's willing to accept that. I mean, not everybody will be. Or the other options are stop trading or get rid of the missus. And I know that's really quite blunt, but you've got to act in your own best interests here. You've got to take the bull by the horns, and you've got to actually realise what it is you need to do. And then after that, because there's bound to be a whole list of them, and there is for anybody, no matter what level you're at, make a quick list and prioritise the changes. So you want to get rid of the easiest noticeable change first, then you want to look at the longest impacting changes second, and then everything else comes afterwards, because they're usually the small things which don't make a huge amount of effort. Now, the reason I say do the easiest noticeable changes first is because you need something to lock you in to this cycle of behaviour and to actually confirm and validate to you why this is worth doing. So if we were to take that out of trading to other problems which are really easy, and this is really obvious, this is why we use this one, people that are overweight. If you want to lose weight, what do? You don't turn around and say, well, I'm now going to do 2 hours of gym work every single day for the next 2 weeks, because that would be pretty hard. You do the easiest noticeable thing first. When you're in the supermarket, you don't buy the crappy food. And it's that simple. It's not in the cupboard then, and so you can't do it. Very easy little change that will have a bigger impact and likely to allow you to lose weight a lot quicker than, forcing yourself through willpower into the gym for several hours each day where you don't want to go, which might not fit with your daily routine. So you do the easiest ones first, and then the longest lasting ones second, because obviously longest lasting ones are the most important ones. Time compounds everything, whether it's pros or cons. So that would be a quick structure that I would suggest to avoid prolonging the struggles. Quite frankly, prolonging the struggles is doing the exact opposite, and that's what people do time and again. Finally, observations that I've had with new traders and people learning to trade. Obviously, I've experienced a lot of them over time on the website, helped a lot out with different courses, and so I can see the same things come up again and again. Now, these common psychological problems I've noticed are usually quite unpopular. So this is a bit of a negative slide. In fact, some of the videos are a little bit negative in the sense that it's not all rainbows and unicorns. Reality is we're trying to deal with a problem here. So if we start at the top there, people think that they can cheat the process and it doesn't apply to them. That is what's known as short-term bias. It applies to everybody. We're all the same, 2 arms, 2 legs. We're trying to learn something that's a little bit harder to crack because obviously on the other side of hard things there's often good payoff, and so it does apply to you too. Next thing, they aren't willing to commit to psychological self-development. Again, probably because they're coming from the short-term angle. But I'll tell you what will happen to people that don't commit to any kind of psychological self-development and aren't even willing to be aware in their trading. They either give up or they end up back here again having to deal with it. Too many people jump around erratically, trying out different systems and asking random people they haven't got a clue who is or what they're doing, or even if they're real, on like Twitter and stuff like that. What can I do? And it's just foolish jumping from one thing to the next. You do so many things half pregnant, you never get anywhere. And, obviously you want some credible resources as well because, good advice is really cheap. But, I mean, at the end of the day, if I wanted to just flog you a course, then I'd just be saying buy my course right now, but I'm not. You need to commit to longer term development and realise that psychological aspects of that are that too. The good news is it will help you outside trading as well. As I've found over time, becoming a better trader and more psychologically aware of certain things has helped me elsewhere in life too. The third thing, they have fixed views on how successful trading works. And that's a bit of a sucker punch. So to do that is quite naive anyway. But if you already know, why are you even trying to learn? So that's a silly one. Think consistency comes from strategy, and obviously having a good strategy, lots of understanding, is a great way of fixing various variables so that you can be more productive and and actually work and nail it down over a longer term. But at the end of the day, your outcome is consistency is an outcome. So consistency is a state of mind. At the end of the day, if your state of mind is not consistent, your trading won't be either. Hence the reason for focusing on your own psychology when trading. A lot of people want support but look in all the wrong places. I've briefly touched on it there already. I mean, places like Twitter, you're rarely going to get some good advice on there. They say that you're the sum of 5 people that you're around, so it makes sense to surround yourself with people that are actually dedicated, that know what they're talking about, that have been doing this for a considerable amount of time, and are quite reasonable people, not just trying to flog you some crap on Twitter under the name of Mickey Mouse Trader or whatever it is. Fail to see how much life problems affect trading consistency. I think, to be honest, a lot of these overlap in places, so I'm going to try and speed up now, but trading is a creative activity, and so if you're upset elsewhere, it's going to seep in. Don't have a logical plan, or don't even keep to it, which is even worse. It's why the easiest problems come first on the previous slide, because we want to get ourselves locked into this is a positive way of doing things, this is actually working, and therefore we'll keep doing it. They try to fit trading in amongst a chaotic routine. So as I get older, I find more and more I prefer my routine, and I don't care if it's a little bit boring because it actually serves me well. But having a good routine that's logical, structured, not chaotic, not messy, including other things such as desk, office, whatever, having all of those things quite grounded and centered will really help you in your trading over the longer term, because ultimately efficiency in your routine is a multiplier. It's like it's basically compounded over time. So whatever you do with the small tweaks now is going to make a big difference over the next week, month, year. And people might be thinking, oh God, I'm not even thinking over the next week, month, year. But the reality is it'll be here a lot quicker than you think it will. And so it's important to do it now. Acknowledging and preparing mentally, monitoring and maintaining behaviour is vital to overall success. So just finishing up then, consistency is a state of mind. If there's one thing you take away from this clip, please remember that consistency is a state of mind. It doesn't matter what strategy you've got. If you're not consistent mentally and psychologically, you're screwed. So you need to be very responsible, get your big boy pants on, even if it means, upsetting yourself a little bit at times, because psychology is really important in your trading and you're not going to succeed without it. It's all about managing the downside and then letting time do its thing and compounding those small differences into profit throughout the future. So finally, before I go, as I mentioned at the beginning, YouTube have changed things up a bit, so make sure you please subscribe and hit the notification bell below this clip to see more videos like this in the future.